Hi everyone, Joe Gentili from Left Tail Risk Advisors. In this video, I want to give some thoughts on a topic that I've been consulted frequently on as an attorney, which is premium financing for life insurance. And so those of you that are not familiar with it, it's a fairly simple concept. It's where a person, when they buy a life insurance policy, borrows money from a bank essentially to pay the life insurance premiums. Um, simple, simple concept. It's pushed very hard by a lot of life insurance agents because typically this is in conjunction with financing very large premiums, which can finance very large paydays for the agents involved. So basically, one thing to keep in mind is that premium financing is leverage. And like in every other instance where leverage involved, when you increase the leverage, you increase the risk. Premium finance changes the risk profile of life insurance and makes it more risky no matter what type of policy you're financing. You could use premium finance to finance a very conservative whole life insurance policy, and you are increasing the risk of this plan not working by employing leverage. Here's who premium financing makes sense for, in my opinion. And I think it could be a very powerful tool in these situations for these people. Premium finance works for people who are very high net worth and who don't need to borrow the money in order to purchase the life insurance policy. They can afford the premium payments of the life insurance policy without the financing. However, they choose to finance the policy because they have other areas in their life where they could use the money to generate better returns than if they were putting the money in the policy and better returns than what they're borrowing at. So if they have a business that is growing very fast, they have a certain skill with regards to real estate investment or public investments, whatever it may be. If they're able to basically say that I am willing to take some risk here because I think I can get better returns elsewhere with this money, and if it turns out that I can't, I can afford to pay for this policy out of pocket. That is the ideal candidate, and that is the person that can benefit from premium financing a life insurance policy. Of course, assuming that they have a need or a want for a life insurance policy to begin with. So that is where premium financing started, but the market for it expanded, and in my point of view, it's expanded in ways that are very dangerous. So it's expanded to people who are, I would say, well off, but not necessarily ultra high net worth, and for people who either, if they didn't have the premium financing in place, they wouldn't be able to pay the premium on their own. So they're doing it that way. Or they've been sold a story where premium finance is essentially a great investment for them because they're going to be borrowing money at X, and the life insurance policy is going to return a greater amount than what they're borrowing for. And that's going to result in, this essentially free insurance or a phenomenally larger death benefit or cash value than they would have if they did not finance it, because that's how leverage works. Leverage amplifies results. So if you're showing somebody a positive result that's going to carry out over a long period of time, leverage is going to amplify that positive result. And that's what's been emphasized, I think, unethically by a lot of agents in selling premium finance. What they are not emphasizing is that the reverse can happen. So you could be, just say right now, borrowing money at 5% for the policy, and the policy is returning 7%, and you're showing that, that as being a linear thing over the course of decades. It's going to look phenomenal. But the rate of return in the life insurance policy is variable. It can go up and down. And the loan rates are typically variable. It can go up and down, and sometimes they move in opposite directions. So I've been brought in as an attorney to evaluate situations where people's policies did not return what they were expecting or anywhere near what they expecting. Interest rates went up, and all of a sudden they're getting massive collateral calls for these loans that they really can't afford. So for the wrong person buying this for the wrong reason, this is a very, very dangerous transaction. So I think at this point, the majority of people are probably sold on this as a dangerous transaction. And to make matters worse for them, a lot of times this premium financing is tied to a type of life insurance that is not on the more conservative end of the spectrum. It's tied to IULs a lot of time, index universal life insurance policies, where the future returns on the policies in illustrations are shown to be very rosy and very stable, but that's not really reality. Reality is that the returns are not quite that predictable and they fluctuate. And the sequence of returns matters. So, to make a long story short, I think premium financing is a fantastic tool for the right person if they're buying it for the right reasons. And that's for the ultra high net worth person that could afford the premium payments without the financing, but they choose to finance anyway because they have a um, higher value use for their cash and they understand the risks involved and they're willing to take that. Who this is not appropriate for is the merely well-off person who is looking to get a larger insurance policy than they could otherwise afford to pay for, or being sold the idea of this premium arbitrage where the policy is going to return a greater amount of money than the loan is going to cost them, and they're going to see these phenomenal results over time. Very, very dangerous for people in that position, and in my opinion, unethical to sell them policies that are premium finance in that situation. So um, I encourage you to reach out if you have any questions about a premium financing transaction. Happy to review it. Happy to answer any questions that you may have. And as always, I encourage you to subscribe for future videos on the topic. So thanks. Have a great day. Bye.